about that this morning. New forms of cross-sector and cross-border collaboration. This is hugely important and brings up this issue of taxonomies and other cross-border initiatives. The removals of barriers to investment, and indeed the direction of more private finance towards climate change mitigation, climate change financing, climate change resilience. That last point is something that has been absolutely at the top of the City of London Corporation agenda over the last few years. We, through our support of the Green Finance Institute, a body which we established within the City of London Corporation, we've done a lot of work both in policy terms, but in the run-up to COP26 in very practical terms. We've worked with the Green Finance Institute to launch a platform, the Green Horizon Summit platform, which some of you may have had an interaction with. We launched that 12 months ago in November 2020, at the time that COP26 was originally scheduled to take place, and then we took it to Glasgow a couple of weeks ago, providing a platform to bring financial and professional services together to mobilise private finance for net zero. There's no doubt, I think probably a lot of people, I'm sure we'll talk about it again on the panel, a lot of people may have felt a little bit underwhelmed, a little bit disappointed by COP26, by where we got to with COP26. My view is that in a few years' time, when we look back at Glasgow, when we look back at COP26, we will recognise it, and it will probably be known in the annals of COP as the finance COP. The COP at which the world of finance turned up. Was that finance was at the table, in the room, and indeed finance was on the table. That commitment made by the Glasgow Financial Alliance for Net Zero, GFANZ, the 450 firms backing the climate change agenda, committing $130 trillion over the next 10 years towards the decarbonisation of the economy. We can debate, I'm sure there may be questions about how hard that commitment is, whether there's double counting in there, whether the firms will come up with the goods when pressed to do so. And indeed, there may be issues around the margins. I'm sure there will be issues around the margins in relation to that commitment. But the fact that that commitment was made, that $130 trillion is on the table, is a game changer. It's a real game changer in relation to the climate challenge that we've got. But we've now got to take it forward. We've actually got to make that a reality, which is going to be the big challenge for the next few years. Alongside that, we've got the EU work at the moment on sustainability, and we in the City of London, we very much support that work. But those ambitious goals that we've set ourselves, nationally and internationally, we can't do this in silos. We can't have countries, we can't have blocks of countries working in competition or indeed cutting across each other. I think it's very important that we emphasise the need to work together. We'll come back, I'm sure, to that as well. We need certainty, we need collaboration, we need international standards, but we need coherence. That will require a degree of international cooperation that we probably don't quite have yet. More to discuss over the course of the next hour. I'm looking forward to the discussion. Thank you all very much, and back to Sophia.
Well, thank you very much. And let me start by starting the roundtable with you. Yes, sustainable finance is a hot topic nowadays. At COP, banks agreed with a commitment to become carbon neutral by 2050, which is quite a strong commitment. But also during COP, the developing countries expressed their unhappiness with the fact that the 100 billion contribution from the developed countries to the developing countries was not reached, with the fact that also in the developed countries the amount of loans has increased instead of the amount of grants, and that also imposes extra difficulties in the deficits of these type of countries that already have a very strong deficit. And sometimes it seems like we have two different worlds talking about sustainability. One is the developed world that talks about sustainable finance, climate finance, green bonds. And then we have the developing countries, the developing world, that is talking about adaptation, and financing adaptation is very difficult. It's something that the private sector, it's too risky for the private sector. So how can we be more, how are we able to bring these two worlds together and actually have the developing world with more finance so that they can adapt better? Because if they adapt better, we will also will also have positive impacts. Because if they don't adapt, it's the developed countries that are going to suffer as well, with all the pressure in terms of human rights, immigration, food availability, and so on.
And many, absolutely, Sophia. Many of those pressures we're already seeing in Europe and in other parts of the developed world. And you're right. I think again, clearly, if you look at on the negative side of where we are at the moment, on the climate change agenda, the failure of the developed countries to meet their existing 100 billion commitment at previous COPs, which was drawn out very clearly at COP26. The Glasgow Climate Pact at COP26 acknowledged the fact that we haven't yet even met the previous COP commitments, despite the good intentions at those meetings. And there's a renewed call for those commitments to be met, alongside an increase in those commitments. But I think the real change, the significant change that COP26 represents, is the point I made a moment ago in relation to the introduction into the equation now of this very significant new commitment of private finance. However, your point about what private finance can do, what the opportunities that private finance has, is a good one. There's all sorts of opportunities around the world for the deployment of finance, but not all of them will be opportunities which can be led by the private finance sector.
That was my point.
Yeah, absolutely. This is the real challenge. And it was something I heard. I was at COP for a couple of days in the first week over the finance days in COP, and this was a topic of conversation that was coming up time and time again. How do we marry the private finance and the public finance world in a way where we can get the best out of both of them? And I think there are ways, and it's good, but it's going to require change and creativity. Creativity in the sense that we're going to have to find new financing structures and solutions, and I'm sure my fellow panelists will have views on that. The role of government or other private or public sector entities will play in effectively providing an equity base, whether that's through guarantees, for instance, as opposed to grants. I mean, nobody's looking for simply grant giving to be part of this. I think that would be an element of the equation, so that there is a sort of an equity base or a first loss that's built in into structures which private finance then can come in with a financing structure on top, a debt finance structure, whatever it is, sitting on top of that government equity. The multilateral development banks will play a critical role in this, but that's where change comes in as well, because in many cases a lot of the MDBs, the development banks, are in a sense already competing with the private sector banks in this space. And I think we're going to have to be honest in terms of who does what and what their role is, which will require the shareholder nations in the MDBs probably becoming involved in discussions with the management around the objectives of MDBs in this sector. They shouldn't be crowding out private finance. They need to be there facilitating the inflow of private finance in a way which in some parts of the world they're not doing at the moment. And in innovation generally, I'd also mention what I hope will be a real plus for London, with the role of insurance in this. I think a number of the financing solutions that people are talking about will involve an insurance component coming in, and I think the innovative use of insurance products in this area will be quite critical as we develop new solutions to the challenge. So it is doable, but it's going to require those two things: creativity and change.
So which means that we are talking about a new finance, following the old finance that has the principles, but we are basically identifying that there is a new world of finance that we also need to create and co-create together.
That's absolutely right.
Thank you. Isabel. Yes, so Euronext has been active on the topics of sustainable finance. I am trying to also improve and expand the green bond issuing and all of that. But Portugal, like most of Europe, it's composed by SMEs. More than 90% are SMEs. So how can Euronext actually help the real economy? Because we sometimes, when you talk about sustainable finance, we are always talking about big corporations and big banks. Of course, they have systemic impact, but also the SMEs, they have a systemic impact because there are billions of SMEs, and because of that, they also have a systemic impact. Sometimes we forget about that. We forget that small things altogether have a systemic impact. So how is Euronext going to be able to help the real economy in terms of becoming it more green, putting it more green?
Well, first of all, thank you very much. It's a real pleasure to be here. Thank you for having invited me. And it's a real pleasure to be here with the Lord Mayor of London and with Isabel Ferreira, which I know very well, and I would say our friend, a good friend. So first, I would like to comment on the commitments of COP26, and I will go back to your question, because Euronext, well, as you know, we are a management, a leading market infrastructure platform for stock trading and for bond trading and for other financial products in Europe. We cover countries in Portugal, in France, Belgium, Holland, Ireland, Norway, Italy, so really the largest today market infrastructure in Europe. And so we have I would say, stronger responsibility, ever stronger responsibility also, and we want to take that very seriously on a commitment towards the sustainability topics, and in particular to the climate change challenges. So the week before COP26, we also committed as a company, because we want to lead by example, and we want to also push our issuers in the same direction. We also committed to reduce our carbon footprint under the 1.5 degree standard, which is the most demanding standard of the Paris Agreement, which means that we will have to reduce our carbon footprint progressively towards close to zero, or as much as possible by 2040s, which is mid-2040s, which is our commitment. So yes, the finance world is committing, the private finance world is committing, and we are just one more example of a leading market infrastructure in Europe following the same path. But I will comment on that later on in the discussion. So I want to go back to your question. So we are embedding ESG in all our products and services. ESG bonds are just one of the examples. Indeed, we have created a green bond segment in 2019, and then we expanded this green bond segment into other sustainability bond segments, like the social bonds, the sustainability-linked bonds, and the sustainability bonds, which are bonds that are raising money to invest exactly on products that will, or on investments and projects that will bring, the transition that we will want to bring, and we are doing it under the most relevant and accepted standards that exist today in the market, so which are basically the International Capital Markets Association standards. And we are obviously ready to adopt the European Union Green Bond Standard whenever this standard will become available, which we expect in the coming months or year. So, by offering these standards and by offering these sections and segments, we are really giving significant visibility, and we are marketing these issuances towards investors. And what we are seeing is that investors are growing the demand for these products, and as such, these products are bringing better financing conditions to companies, which is a very good signal, because that means that there are a growing number of investors, institutional investors, but also individual retail investors, as we call them, that are taking these investments in their portfolios. Demand is almost doubling every year in the last 3 years. We have over 200 billion of these kinds of bonds listed in our markets. And this means that the finance world is really channeling growing amounts of funds towards these objectives. So that's very good news. On the indices, which is a topic that you also touched in your question, we also produce indices, ESG indices, and this is also very important. And I want to explain you why, because every time we build a sustainability index, it means that we will select companies not only by their size and liquidity, which is the usual criteria to build indices, but also on their performance in terms of sustainability practices. So, for example, we have the Low Carbon 100 Index, which selects the 100 companies in Europe which are Paris aligned. It's a low carbon Paris aligned index, which are Paris aligned, meaning that they already have commitments to reduce their carbon footprint in alignment with the 1.5 degree commitment or Paris Agreement rules. So, and these indices, just also to give you an overview, we have been growing our families of indices. We now are reaching about 60 families of ESG indices. And also because there is a growing demand by institutional investors, who are the users of these indices, to allocate more and more parts of their portfolios to sustainability companies and investments. And this is also very good news. So when you ask me about what we can do for smaller companies, indeed, markets are have more appetite for large investments because they're more liquid, and liquidity is a very important topic in investment, in institutional investment, and retail investment as well, because investors want to be able to trade and to sell and to buy their investments. So it's easier to make to issue bonds, for example, in large amounts. But we have seen Portuguese companies also issuing smaller amounts. And by the way, we've been seeing a growing number of Portuguese companies issuing ESG bonds. It started with EDP, but we now have other issuers like Amorim or like Motengil, who has issued a very nice social. It's a sustainability-linked bond, but it's indeed linked to a social target. We are seeing Greenvolt and Motengil and other companies. So there is a growing number of companies touching the bond markets, and not only listed companies, which is interesting to mention. Pestana, for example, which is not a listed company. So it's a market that is open for listed and non-listed companies. It's a fact that's easier for larger companies to do it. But I have been, and Abel has been part of these discussions as well, proposing to our banks and to our government to issue or to support the issuance of basket bonds. Mm-hmm. Because basket bonds is really what we can do to help smaller companies, to build baskets of bonds, issue, smaller amounts like 1 or 1.5 or 2 million euros per company, and then put them together in a vehicle. It can be a securitization vehicle, it can be an investment fund or an investment company. There are different models. We have seen it in Italy, where we are as Euronext, We have seen it in France.
Are we seeing it in Portugal?
Pardon?
Are we seeing it in Portugal?
There are conversations, and there is analysis being done on the possibility of doing it. And in one case, in the tourism sector, I think there is a really advanced program being prepared. And so this logic of a basket is interesting, and it can be a thematic basket, it can be a sector basket, it can be, internationalization companies, which is one of the examples we have in Italy. So there are different possibilities to bundle the smaller companies together. And there is also a very interesting component that Lord Mayor referred, which is the guarantees. We have in Portugal one of the most advanced system of mutual guarantees, I would say, in the world. So it's very easy, and the regulation allows it, because I have tested it, to add guarantees to basket bonds as we add to loans. And we have a very long tradition of adding guarantees to loans in Portugal. And there is nothing preventing us to adding them to bonds, so to the capital markets. It's just that there has to be, some willing and some stakeholders that have to be, sitting around the table to put it together,
They need to trust
yeah.
each other.
So some creativity and some change, indeed. I completely agree.
Thank you.
Thank you.
Abel, so as Isabel said, investors are looking for green investments. And sometimes they argue that the market still doesn't have enough green products available for them to put their money. And we are all talking about the green of sustainable bonds. It's increasing, as Isabel said. But what can you say about the perceptions that, at least, well, you represent a Portuguese association, so my focus is going to be on Portugal. Are companies actually perceiving green bonds as something that can be interesting for them in terms of capital, of source of capital, or it is still this initial gap of creating the first bond brings additional efforts to the company, because they need to create a framework, they need to deal with lawyers, with third-party, they need to deal at least with 4 different organizations. And then, of course, that's an investment. I would not call it a cost, because, well, it doesn't make sense to call it a cost. It makes sense to call it an investment. So is this still an obstacle, or are we moving forward to see that this is an investment that brings returns because the yields are more interesting for the companies, or we are still dealing with the majority of companies still struggling to understand how to do a bond?
Okay, thank you very much for the invitation, both ISEG and the UK Embassy in Portugal. It's a pleasure and an honor to be here to discuss with my good friends, Isabel, Sophia, Lord Mayor. It's an honor. Give me 2 minutes just to make a comment regarding COP, but I will answer the green bonds question. I think it may be interesting for the sake of debate also to say something about COP. This was, I believe, the 5th COP after Paris in 2015. We have been having these conferences since 1995, and the practical result of this is that the mean temperature in terms of course, Earth's atmosphere raised more than doubled since we started having these discussions. So something is not right with the way COP is working. Lord Mayor said in some years we will see this as the finance COP. I agree. I think it's probably the best way. I heard it's put as a kind of a success. But something is really not working. I personally think it's probably the model. The model doesn't work anymore. Maybe it worked in Paris in 2015, but it's not working for the needs and the urgency of the current status of the situation. I will not dare to present or to propose a different model, but I have an humble suggestion, which is I think we need to put companies at the center of this discussion. And companies not as the subject of more rules, more regulation, more requirements, more obligations. Companies not as protagonists of committing to put money and action in sustainability, which companies are doing. But we need to center the discussion in what are the conditions companies need to do the innovation, to create the products and the services that we need to, in due time, be able to answer the challenges that climate change puts. And it's puzzling to look at so many clever people and representatives discussing during so many days, and the conditions in which companies must strive and follow the paths of innovation to tackle these challenges were almost not discussed.
Because it's traditional, it's not the scope of COP.
That's the problem.
It's not the scope.
And so I think that companies are embracing sustainability, as it was said. Companies are acting. Action is eloquence, as Volumnian said in Coriolanus. Sorry, I didn't resist. But in fact, we are not creating the conditions for companies and the private sector to thrive in this path.
And what conditions would those be?
The first condition would be not to transform sustainability and ESG in the bureaucratic nightmare and submerging companies in a tsunami of ill-fitted regulations and allowing boards of directors to spend time discussing innovation and the creation of new products and services instead of spending hours and hours discussing about compliance.
So why hasn't that occurred in the past already?
Because we are in a very difficult...
Over the last 15 years, we were not always in a very difficult circumstance?
We have been, because we are in Europe. The European Commission is always find a new way to submerging us with hundreds of pages of requirements and obligations. That was why the UK, I don't agree, but it was why the UK decided what they decided.
My question was not that. Sorry to interrupt.
I know that your question was not that.
But you are trying to avoid my question.
That's the question
why do we need papers today if we had 20 years as a market economy to deal and to see the topic and nothing happened because it has been too slow, that the world temperature has increased 1.3
because
already?
There was no momentum.
What do you mean? So then it means that the momentum is... Now we don't have time and you need regulation to speed up.
I'm not sure about that. That's the problem. I think that regulation is not speeding up. I think regulation is going to hinder the process and create a lot of difficulties for companies. If companies spend more time in compliance than in innovation, if the costs are rising every day and companies will not see the net value, for instance, of issuing green bonds, it will become much more difficult to face these challenges.
I agree, but is that a problem of the system as it is and not a problem of sustainability and ESG topics? because companies and banks have to deal with lots of regulation anyway, and we feel more tempted to talk about ESG than the other regulations.
No, but the problem is that if you look at listed companies, during the last 10 years, everybody was too busy trying to comply with these thousands of regulations that the European Commission was preparing and presenting. And that's probably one of the reasons why we were distracting and not looking at essential issues like climate change.
So you argue that we are all enlightened managers.
And now what is happening is that we are seeing the same happen with sustainability and ESG regulation. And I will not even start with discussing why is the G in the ESG. Let's not go there yet. Regarding green bonds, yes, we have a number of green bonds issuance in Portugal. We have, I think, 16 entities that issued green bonds, Portuguese issuers. In fact, we reached a milestone, an important milestone, very recently of 10,000 millions, if you rather prefer 10 billion euros of green bonds issued by Portuguese issuers. Of course, some of the more preeminent listed companies are in that group. Isabel already named some of them. And this, of course, and in fact, 2021 is a record here in terms of issuance of green bonds in Portugal.
And all over the world.
Yeah, almost half of this amount has been issued during the current year. And of course, this shows that issuers understand the benefits of green bonds in terms of attraction of new investors interested in the sustainable strategy of companies, in terms of being a powerful communication tool with stakeholders regarding sustainability and ESG topics. And I would say maybe more important than that, being a very important incentive for better climate risk management, both from corporate and a portfolio perspective, which is of utmost importance in terms of embedding sustainability in the activity of companies. This said, and I also sit in the board of European issuers, so I also have a view of what is going on with other companies in the continent. It is true on one side that green bonds are still a small fraction of the global debt market, so there is a lot of room for increasing that fraction, but there are problems and difficulties that we need to tackle urgently in order to be able to achieve that goal. First one, issuer fatigue or exhaustion. Issuers that want to issue green bonds have to deal with an overlapping amount of institutions, governments, regulators, investors, certifiers, index providers, advisors, a whole bunch of
green jobs.
Yeah,
it's called green jobs.
A whole
increases GDP, so it also has a positive.
A whole bunch of entities publishing different papers, requirements, criteria, etc. So many issuers, I think, in the short term, will be exhausted by this, which means that there is a second problem that we need to solve urgently, and that problem is the problem of the perceived lack of pricing incentives for issuers. We need to make clear and evident that there is some discount if I issue green bonds instead of vanilla common bonds. On the side of investors also, there is a lack of green contractual security. If I invest in a bond that was sold to me as green, I must be protected and be assured that that bond is going to be green until the end of its life. It is not clear at this point that this is the case. And of course, the quality of reporting metrics and transparency has to improve. So yes, green bonds are becoming the mainstream. Issuers and companies see the benefits, but in terms of functioning in the markets, we need to solve some specific problems. And it should be that the focus of regulation, solving the problems that really exist and not contribute to create problems that were not there and that are going to create difficulties for the process where we are in this point.
So picking up on what Abel was just saying, and basically when we are talking about green bonds, we are actually talking about changing from a fossil fuel-based economy to a renewable or to a less polluting economy. You refer that in terms of the commitment of City of London is also Scope 3, which means the money, the impact that the money has to become carbon neutral by 2040, which is just tomorrow. So my question is, even BlackRock, that speaks quite a lot about this topic, has quite a lot of funds investing in fossil fuel because you can just suddenly take your money out totally. So which means that there is still lots, because I'm not saying this is good or bad, it's just the way the economy, we learn how to do economy and now we need to change. So my question is, there is that strong commitment in the City of London, which is quite demanding. It implies a completely shift of minds in terms of the investors, because petrol still provides lots of cash today. So what is the trade-off in a pure business maximizing profit approach? First, is that the approach that still exists when we are talking about these issues? And if yes, why should anyone not continue to hold petrol stocks while they are still profit? And if in order to change this approach, to move towards a greener sources of energy, does this imply any other approach to management that is not profit maximization? Because otherwise I don't understand why people would. I don't understand what is the logic of the decision-making process.
Again, I will answer that question in a moment, Sophia, but I just want to come back on Abel's previous comments, which I think there is this, I have to say, there's a tension. I detect a tension in his comments around the role of regulation as a stick and a carrot. I think that it's a key element in this, how the regulation playing a positive role as opposed to just being layers and layers and layers of requirements that need to be met and that ultimately lose sight of what the objective should be. And we've seen that so often. I'm not going to comment. Certainly not going to comment on Brexit. I was hoping that this would be one of the meetings or the sessions I'd have in this where I wouldn't be talking about Brexit. So I'm not going to go there on that one. There's no need for that. Despite that implicit challenge. The regulation, we see it so often in regulation. Another without again wanting to go off topic, one area of regulation we're very focused on in the City of London at the moment around financial crime, money laundering, the sanctions that are there. And actually, when you look at what regulation does there, which is usually speaking, slap a big fine on banks for failing to comply with money laundering regulations, and the world continues, and we don't actually see any real change, and there is. That's another example of where regulation, in fact, is not yet, and possibly on the current model, will ever achieve the right outcomes. So I think we need, and that's a very good example. We've been doing that for 20 years, and we're still getting the same results. So I think Abel's challenge around regulation in the green space, the climate change space, is a real one, and we need to have a look at it. And I think there is a rush towards very detailed, very, very granular regulation in this space, with hundreds of pages of detailed taxonomies being published, for instance, by the EU, but also alternative taxonomies now around the world as well. I think
including the UK.
Including the UK. But one of the things we've been pretty good at in the City of London over the centuries is actually taking market-led, practitioner-led approaches to a problem. And I think there is an element here of we do need to make sure that we're looking at the ground up as well, which I think is essentially probably Apple's point here, that we need to look at what works in the business world, in the real world, so that the regulation is incentivizing good behavior, not just punishing bad behavior or allowing people to do all sorts of things behind artificial walls of compliance and the sort of the complexity of legal detail. So that I think is a real challenge. We could perhaps discuss that a little bit more in a moment, maybe. Just on the other point which you've raised, I think this question of the approach to investments, whether absolute return, whether profit, whether on the one hand, or whether just maximising profits on a short-term basis. What is the right balance? Again, these are real concerns in the asset management industry at the moment. As a lawyer, I'm talking to, for instance, pension fund trustees about their obligations as holders of long-term savings on behalf of millions of their customers. What are their obligations as trustees, as fiduciaries in that? Because until quite recently, most of these asset managers, most of these long-term fund managers would have regarded fairly short-term metrics around increasing profitability, maximising return as being their principal driver, the principal element of their investment considerations. But they're now beginning to see, and I think there is a good legal basis for this, certainly in English law, in our analysis of the law around trusts in this space, that they need to have a wider set of considerations. I'm not saying you go as far as looking at the social impact that your investments have, but that actually the long term nature of the return you get from your investments is increasingly important, and how that feeds through the investment decisions you make today, the investments you're holding, the shape of those investments and the return that they will be generating in 15 years' time is a valid consideration and needs to be given a higher degree of priority than it is at the moment.
So what you are saying is that we need to bring medium and long term back, and that fund managers, they need to have the incentives to be willing to manage their funds on long term.
A greater certainly yes, that needs to be more directly a factor against which their performance is being measured. That's right. I think that becomes a more significant factor in terms of the and that of course then requires investors to be informed about that, to understand that. But I think actually that's not the problem. I mean the problem, most investors, certainly most younger investors now, that is a key consideration. We're hearing it all the time, but I had a conversation yesterday with the chairman of a leading asset management company, who was saying exactly that his own family, members of his own family have been asking about switching their investments. His daughter was so that you get these are real considerations that investors, particularly younger investors coming to the market for the first time, are now expecting to be taken into consideration with their money, because ultimately it is their money.
Okay. We have time for some, well, we have still some time. I do have questions, but I would like to ask the audience if is anyone that would like to ask a question. Just raise your hands. And yes. Oh gosh, so maybe, so as long as you ask 2 questions really sharp, you are, I can, you need to speak for the microphone so that this becomes recorded.
Good morning, everyone. Thank you for.
Just introduce yourself.
I'm Vasco Dev from ISEG. I'm second year student on the economics bachelor. So my 2 questions are very simple. So with the pandemic and with this objective of fighting climate change, we've seen that states and countries are increasing the participation in the economy. So I'd like to know, in one of those some are justified and others maybe not. So my question, and one of them in Portugal was, for example, controlling the profit margins of fuel companies. I'd like to know if you think that was a good idea, a bad idea, if that threatens the free market or not. Would there be a good policy to adopt in other countries as a way to control what we're doing with fuel? And another question, and sorry for bringing politics into this, but
it's all about politics
but
at the end
this
of the
might
day,
be a
so
very
go ahead.
important question. So in the United States, we saw a change in the presidency and also a change in the way to see climate change. I think I do not need to justify this. But with this new U.S. administration going very low on the polls over the popularity, the possibility of having Donald Trump again on the White House in 6 years or so might be devastating, as he has a total different opinion over climate change or what we should do. Imagine if Donald Trump gets elected again and wants to promote that narrative of there's no climate change, that's a Chinese venture or something. Would you think that possibly in the United States we will have, for example, 2 different approaches? One from the markets in which is adopting those green bonds and then sustainability, and another from the state which is totally different from that? Or will we see, for example, in the United States, companies that will try to seek refuge in a place where they can explore fuel without having any problem over that? So those are my 2 questions.
Okay, that's fine, thank you. And there is another question? You have one? Just ask.
Thank you for the presentation. I'm Pedro, here also at ISEG in Economics, the 3rd year. As Abel mentioned, very well mentioned, there are a lot of regulations and commitments being made, and sometimes even those commitments go backwards. As we saw in COP26, there was a lighter and softer approach on coal, especially in emerging markets. And regarding big infrastructure, and we've seen there's a lack of investment in that, and there's mostly being carried out by developing banks. And as the mayor said, there are some crowding out effects. So how can we give more incentives to private investors for this large, long-term infrastructure? Thank you.
Any other question? Popping up? It's now or never. So it's your last chance. Yes, it always works.
Hi.
Yeah, go ahead.
Hi, my name is Francisco. I'm from the British Embassy. I have a question, which is, how can we prevent financial centers and capital, mainly financial centers, from competing with each other as the short-term profit incentives grow larger for non-renewables? How can we prevent that there's a run for the bottom in terms of regulatory and in terms of control for long-term renewable incentives?
Thank you. Any other? Are you sure there's no other person? Okay, so what I would ask is the 3 of you to comment this, and then so you need to comment really quick. Yes, you need to comment really quick, and at the same time, since we are in a business school, I would like you to leave a final message to a business school. So just very simple. It's already 12. If we are able to have 5 more minutes, so we have 5 more minutes for the 3 of you to respond. And to, there are quite a few students in the room, probably hearing about this kind of the first, second time. What would you have to say to them about this topic as your last message for today? Lord Mayor, you can start, and then I'll go back to you at the end again.
Okay, well, always suspicious, always wary of somebody who says he's got a simple question, and I think we just saw that an example of that in action a minute ago. The state, there's a whole philosophical discussion about the state intervention in economics. I think everyone will probably have a slightly different view on it. I have a very, as you'd be unsurprised to learn, as Lord Mayor of the City of London, I have a fairly straightforward capitalist view about these things, and I think that those sorts of state interventions are usually not helpful and distort economic behaviour ultimately. But there is, of course, there is a role for the state in modern economy. It's just getting it right. I mean, that is sort of in 10 seconds is basically of what we could spend a few hours, a really good seminar talking about that before we have to get into the topic properly. You're right. I mean, there's a real issue in terms of there is a risk. You picked up in your second question about the US a specific issue, which is the whole arbitrage opportunity that is emerging. And Larry Fink was speaking about this at COP26. BlackRock, companies like that. I have no doubt at all about the authenticity of their commitment. They and many of the other companies that are committed on this agenda are fully committed, and their behaviour is not going to change with the change if Trump was to be President Trump was to be re-elected. That's not going to change what happens with companies like that. But there is, and he pointed to it, a huge arbitrage opportunity here, where we could see very brown companies being taken out of the public markets, finding themselves being privately financed by interests around the world which have no interest or engagement with the climate change agenda, and that is a serious risk, and that, in my view, is best addressed by private finance, by private finance being as engaged as possible. Talking about defunding, for instance, cutting off sources of finance into businesses which have a serious transition challenge ahead of them is madness, because you will just do exactly that. You will drive them off into a grey world where they won't ultimately be playing any part in the climate change agenda at all. So I think the transition. This is all about transition finance and finding the right ways of getting that transition finance through. The second question about how you incentivize private finance, I think comes the role of the development banks. I think this is in the developing world. This is really at the heart of the issue, and it's not easy because it's a big political issue here, and we all that's where I think actually things like COP actually do have a role, because they do engage governments, they do engage the policy makers, and they have to get these sorts of topics out there on the table. We can't ignore it, because if you don't have the policy makers fully engaged and actually then talking about, well, hang on a second, we've got to sit down and we've got to change the mandate of some of these development banks so that they're not in competition directly with private finance, but actually working really in partnership with them. That we're still going to have that obstacle in place. So that's why I would actually defend the role of big summits like COP, because they get those conversations going, and avoiding competition between financial centres to sort of creating long-term incentives. Well, that's sort of what we've been trying to do with things like our Green Horizons Summit platform in the city and things like that. I mean, we're actually trying to get cities working together. We've also, for instance, in the city, we've got on Tuesday morning, I was on a green finance roundtable with the governor of Tokyo and the Governor Koike and Nakaso-san, who runs Tokyo Financial City, on the green finance agenda, which is something where we have a strong partnership with Tokyo on this very topic, and it's those sorts of bilateral city-to-city relationships. We're building a similar relationship, for instance, with Singapore as well. So we're trying to create, through the city, a network of aligned financial centres around the world where this is a topic that we're all talking about. So we're avoiding the risk of competition and a race to the bottom. I mean,
Thank you.
Yeah.
Very short, two of you, and then the last. Then I'll go back to Lord Mayor just at the end. Just a very short sentence. You have students in front of you in the business and economics school. What would you have to say to them on this topic?
Yeah, well,
in a short sentence.
I would like to briefly comment on what works and on the regulatory burdens, because we also feel that same problem, and to give you my own very personal view. So what regulation has been done is basically to make the issues more transparent. So take issuers, take companies to disclose on an innumerous number of topics which sometimes are not so relevant for this or that company. And these regulations, taxonomies, and this is a huge burden. But the only purpose of it is to disclose information, so that by being transparent, there will be a kind of pressure from the society, from the clients, from the stakeholders towards improvement, which is one way to go, but it's burdensome, it's complex, it brings a lot of work to regulators and to everyone. And what I think it mostly works, and being from economics myself as well, is that companies and investors work by incentives, by financial incentives mostly. That means that it probably would be better to work on a carbon price that works, or a carbon tax that works on a progressive way, rather than, having all this amount of bureaucracy and of regulation. So I think we are not on the right balance in this point, and my view is that we should work more on having a clear financial incentive towards transition, rather than overburdening companies with regulation. And one good news is that, as Isabel said, the momentum is growing. So governments are being pushed to really, make more also on these topics. So hopefully this will improve. And the fact that a framework for voluntary carbon markets being put together in COP26 was, a small step, but it was a good step. Final word for you is that, finance, green finance, sustainable finance will grow, will continue to grow, and will become ever more important because of all these reasons. It's regulatory developments being on the on the incentive side, on the more regulatory side, but it will continue to be there. And investors, as Lord Mayor said, people like you and us are pushing. They want really to make a difference, and that's what really is going to make companies change ultimately as well. So that's good news too.
Thank you, Isabel. Abel, 30 seconds for you.
5 topics from the 10.
30 seconds,
5
starting one.
topics from the 10 I had. State intervention is always a bad idea, and it's even a worse idea if governments that were not able to, in due time, prepare for what was coming, and everybody saw it was coming, are now trying to justify state intervention, giving a bad reputation to sustainability, which is the case. I'm not as optimistic as you that Trump is going to be president of the United States in 6 years' time. I think it's going to happen sooner. But anyway, as the Lord Mayor explained, American companies are committed, and I think they are not going to change their mind. And also, American states, I will not say all of them, but probably the majority of them, are also committed. So the change in the federal government is not as dramatic as it can seem. Messages for you. First, don't fall for labels and don't be fooled by purpose. Please don't go cheerleading things just because the name of it sounds great. An example, the European Commission has an initiative called Sustainable Corporate Governance. Wow, that's amazing. who will not want sustainable corporate governance?
30 seconds.
The problem is what is inside. And what is inside is an attack in corporate law and to the functioning
So
of
a
companies
positive message for the students.
everywhere.
Abel, we can't end the session with
I have a
with
last
that
one.
type of.
I have a last one that is
Go ahead, 5 seconds.
I have a last one that is really heartbreaking. But before that, all we want, the three of us here, I think, is to help this transition that is going to happen to be a just and fair and planned and articulated transition. What is now happening and going on with this regulation is not a fair and planned transition, is a disruptive transition.
So the last
The
heartbreaking.
last
cool
one, and not heartbreaking because I really love the work I do, is trust companies. Because we must all remember that even in the very extremely difficult situation during COVID-19 pandemic, companies kept implementing climate solutions, leading the process of industry transformation, and basically driving innovation and growth, and by the way, fighting to keep long-term jobs. Thank you.
Lord Meyer, last wrap up.
Yeah, I was in Hyderabad a couple of years ago and talking to one of the great Hyderabad pharmaceutical pioneers who built a huge pharmaceutical industry in Hyderabad. He's also president of one of the postgrad business schools in Hyderabad, and he was saying what he loved about visiting the school was going and sitting in the canteen, the coffee shop in the school, listening to the students talking and solving the problems of the future. And he said sometimes they would come over and they'd ask him his opinion, and he said those were the best conversations that he'd ever had when he was doing all the things he was doing on various boards he was on and all the rest of it. The best conversations he's had were with the students in the coffee shop in that business school in Hyderabad. And I think I think it's all about that. It's about the creativity and the innovation that comes from those conversations, which you guys can have as the next generation of business leaders in the world of tomorrow. Just keep having those conversations, because the solutions will come from those conversations, not from the conversations, I'm almost certain not from the conversations that the governments and regulators are having in COP.
Oh, well, thank you very much for your time. Thank you very much for being here. And I think we can just finish with an applause.